Hi, welcome back once again to CBSE Board Economics. So we have been discussing the banking chapter of money and banking unit. We have already discussed the difference between the central bank and the commercial banks. And we discussed the central bank is the apex institution of the government. It's the main response to the central bank to control the credit, that is monetary policy of the government. And we discussed further, the central bank has 5 or 6 main important functions. The first function is sole authority of issuing currency notes. Second function is central bank is the banker of the government. The third function is central bank is the Bankers Bank. And the fourth function is central bank is the banker of the last resort. And the fifth function is central bank is the custodian of all foreign exchange reserves. And the last one is monetary policy, credit control policy of the central bank. We have already discussed the first 2 functions in detail. Now in this video, we'll be discussing why the central bank is called the Bankers Bank. What is Bankers Bank? We know that in the economy there are many commercial banks. So for example, you must have seen State Bank of India, ICICI, HDFC, and a lot of commercial banks. Mind it, all these banks have to work under the supervision of the central bank. Central bank helps these commercial banks. Central bank helps them by giving short-term loans. Central bank also gives them long-term loans. Central bank regulates them. Central bank gives permission to open a new bank, or central bank also gives permission for branch expansion. They can expand their branches. That means all the commercial banks have to work under the central bank. Let's see the functions of the central bank as banker to the banks. The first function is Bankers Bank and Supervisor. Why do we call it Bankers Bank? It is the Bankers Bank. It helps all the other commercial banks and it supervises them. It provides financial assistance to commercial banks through loans and advances. This is the first point. The main responsible central bank is to provide short-term and long-term credit to the commercial banks. It provides loans to the commercial banks. It supervises them. It acts as Bankers Bank. It provides loans to the commercial banks. The second function under Bankers Bank, central bank fixes cash reserve ratio, CRR. What is CRR? Cash reserve ratio. As per the guidelines of the central bank, every commercial bank is supposed to keep a percentage of their cash reserve ratios with the central bank. That we call it as CRR, cash reserve ratio. The central bank fixes this cash reserve ratio, maybe 4%, maybe 6%, maybe 8%, maybe 10%, maybe 2%, depending upon the economic situation. The central bank fixes CRR. That means according to the CRR, the commercial banks are supposed to keep cash, a percentage of the cash reserves they have with the RBI. That's the central bank. And the next one, central bank also fixes statutory liquid reserve ratios, CRR and SLR, statutory liquidity ratio, that is statutory reserves liquidity ratios, SLR. What is SLR? The central bank fixes not only CRR, which is the percentage of cash deposits they have to keep it in the central bank. Not only that, a percentage of the cash they have to keep it with themselves without advancing as loans to their clients or customers. That is SLR, statutory liquidity ratio. It means the central bank is fixing CRR and central bank is also fixing SLR. Both. That means the central bank has all the powers. So the central bank provides loans to them, the central bank fixes CRR, the central bank fixes SLR, statutory liquidity ratio. It supervises, regulates and controls the activities of all commercial banks. It supervises them, regulates them and all the activities of the commercial bank. So depending upon the economic situation, in case of inflation in the central bank, inflation in the economy, the central bank advises the commercial banks not to advance loans, or maybe the central bank increases the interest rates so that there should not be more credit creation in the economy. In case of depression or recession in the economy, the central bank advises the commercial banks to liberally give loans or decrease the interest rate. That is, it supervises, regulates, controls and helps the commercial banks. And the next point you have, it provides license for new banks. I told you on branches. Whenever it can give license to any industry or firm to open a bank and the branch expansion of a commercial bank. If the SBI, State Bank of India or ICICI wants to expand their branches, they have to take permission from the central bank. And lender of the last resort, the central bank is the lender of the last resort. What is lender of the last resort? I told you, as a Bankers Bank, in case of any financial crisis in any commercial banks, the commercial bank is not able to meet its obligations towards its customers. So the central bank come to its rescue by giving them short-term loans. That is why it is called lender of the last resort. This point is important. Lender of the last resort. The commercial banks have to depend on the central bank in case of any crisis. That's why it's lender of the last resort. There's the last resort they have. There's the last hope the commercial banks have in case of any financial crisis and they're not able to meet their obligations towards its customers. And the last one, merging. What it means, in case a bank is not able to do well and not able to perform according to the guidelines of the central bank can close it down or amalgamate, or the central bank can merge it with the other banks. The central bank is merging one bank with the other bank. Recently, many of the banks have been merged by the central bank. The central bank has the power. The central bank has the power to merge one bank with the other bank. Merging of the commercial banks and amalgamation, that we call it as. And the central bank has the power to close down a commercial bank. If the commercial banks are not working according to the guidance of the central bank, it can liquidate, that is, it will close its operations. I repeat once again, we are discussing the next third important function of the central bank, that is Bankers Bank. What it means in simple words: number one, central bank is the Bankers Bank. It means the central bank supervises the banks, commercial banks, the central bank regulates the commercial banks, the central bank helps the commercial banks, the central bank gives short-term loans, the central bank gives long-term loans, the central bank acts as a lender of the last resort. If there is any financial crisis, the central bank helps them by giving them emergency loans. The central bank helps them opening the new branches. The central bank also gives license to new banks. The central bank can amalgamate or merge one bank with other bank. The central bank fixes CRR, cash reserve ratio. The central bank fixes also SLR, statutory liquidity ratio. It means the central bank has all the powers on all the commercial banks. So they have to work under the guidelines of the central bank. That's all we have time for today. Till we meet next time, it's goodbye from Saddam Hussein. Right, work hard, because I always tell you there's no substitution for hard work. Till we meet, it's goodbye from Saddam Hussein. Bye-bye. Banks are liquidation amalgam.